When it comes to your retirement, the person giving you financial advice matters just as much as the advice itself. But here's the problem. Most people don't know the difference between a financial advisor and an insurance agent, let alone how they get paid. One typically focuses on growing your money in the market, and the other on protecting it with guarantees. So who should you trust with your life savings, and how do you really know that they're working for you? That's exactly what we're diving into in this lesson. If it's your first time here, I'm Dr. Amanda. Welcome to the Retirement Income School. This is your place for financial education that helps you protect your wealth and create guaranteed lifetime income so you can retire financially relaxed. Let's start by asking yourself this question. Would you go to a dentist for a heart issue? Really think about this. If you were having a heart issue, would you go to a dentist or a heart specialist? Of course, you would go to the heart specialist. And when we're thinking about specialists, they exist for a reason. So when we apply this to your retirement income, you want to think about how different financial professionals have distinct specialties. Market advisors focus on growing your assets. They may not specialize in retirement income planning, and your retirement really deserves specialized expertise just like your health. So in moving forward in this lesson, I really want you to be considering, who is the specialist I'm looking for? Is it a financial advisor? Is it somebody who's focused on accumulation in my portfolio? Am I focused on decumulation and thinking about retirement income? Who is the right fit for me? There is no right answer for every single person. It's going to be a blend of options, and it's going to be very unique to your situation. Most importantly, financial professionals differ in crucial ways. They have different roles and expertise, they have varying compensation structures, and they have very distinct approaches to retirement planning. The wrong financial guidance can cost you thousands in retirement income and security. And I know that you're here because you want guaranteed lifetime income. You want to have protection in your portfolio. You want to be able to know that your money's going to outlast you. So these are very crucial decisions that you make, and it's important to understand the differences between different types of financial experts. So in this lesson, you're going to discover the real differences, so understand how advisors and agents differ in fundamental ways, the way that they approach your retirement income and their focus in general, and how they have different compensation models. You'll learn how each gets paid and what that means for your retirement strategy, and finding your best fit. Discover which professional aligns best with your specific retirement goals. So let's start with, what is a financial advisor? Financial advisors are going to be investment focused, which means that they specialize in stocks, bonds, mutual funds, and market-based investments. They're going to be fee-based in their compensation structure. So they typically charge a percentage of your assets under management, and you'll hear this called AUM, assets under management. So you bring your portfolio to them and they charge a fee based on the amount of assets you have in that portfolio. And financial advisors typically have a variable fiduciary status. What I mean by this is that some are fiduciaries that are required to put your interests first, and others are not. And sometimes it's hard to tell. This is why you want to have a list of questions when you're meeting with a financial advisor, a retirement specialist, an insurance agent, any person that you're talking to about your hard-earned money. You want to have a list of questions to ask them to make sure that they have your best interest in mind and that they're going to be able to serve you the best in terms of meeting your specific goals. A financial advisor differs from an insurance agent because an insurance agent is going to be protection focused. So they're licensed to offer annuities, life insurance, and long-term care solutions. Notice this is insurance. So there's a lot of protection focus. And they're also very much focused on income and guarantees. They prioritize reliable income streams and financial protection over market growth. A financial advisor is typically going to be focused on market growth and that accumulation phase of your retirement portfolio, while an insurance agent, especially one who's focusing on retirement income, is going to be focused on financial protection first and foremost, and making sure that you're set up to protect yourself from the portfolio risks in retirement: longevity risk, market risk, inflation risk, sequence of returns risk. And so it's protection and income on the side of an insurance agent versus a financial advisor who's looking at a bigger, larger portfolio picture. And an insurance agent is insurance paid. So remember, we said that a financial advisor is going to be paid by AUM, assets under management. An insurance agent is paid by the insurance companies that they work for, not directly from your portfolio. So when you come work with someone like me who's an insurance agent, the companies that I'm contracted with, the insurance carriers, pay me to work with you. And so you don't pay anything out of pocket to work with me, and it doesn't come out of your investment portfolio. The insurance company pays me. Whereas when you go to a financial advisor, you're going to be paying a percentage of your portfolio every single year, no matter how it performs. So knowing those differences between an insurance agent and a financial advisor, which one do you need? Think of it this way: your personal situation and your goals should determine your choice. Perhaps you're much more growth focused. This might mean that you're younger and you have time to recover from market losses, or you really need to build your wealth. Then you might choose a financial advisor. Yet, I do want to say here that there are annuities that are growth focused and accumulation focused, and also whole life insurance is a very safe and predictable way to grow your wealth. So if you want a financial advisor for growth focus, if you want to be invested in the market, just make sure that you're at the right age and you have enough assets to ensure that you're protected from market losses and the sequence of returns risk while you're moving into that retirement phase of your life. You wouldn't want to be taking big risks in your portfolio if you don't have a lot to lose and you don't have time to recover if you're relying on that income for your retirement plan. Alternatively, if you're on the protection focused side, this means that you're probably nearing or in retirement and you need to protect your assets to ensure income. So in that case, you want to find a retirement specialist who's going to be protection focused. Consider the income floor that I've talked about. If you go back to episode 6 of the podcast or just type in income floor into my YouTube channel, Retirement Income School, you'll find that I talk about how to meet your income floor. This is where you have your baseline needs met through Social Security, pensions, annuities, whole life insurance. You've got predictability in that income floor, and then you can invest the rest. You can use that income floor sometimes as a buffer if you want to invest. That way you know you're protected and you have all of your ends met before you decide to then be on the growth side of things. So as you can see, most retirees are going to need some combination of both approaches. And I want to say here that there are amazing financial advisors and horrible financial advisors. Same with insurance agents. Don't be biased by hearing stories that you see on the internet or even from other people that you hear say things. Do your own research. This is your hard-earned money that you have spent your lifetime accumulating. You don't want to make a choice based on hearsay. So make sure that you ask questions. And I'm going to give you a list of questions here in a few minutes that you can ask different financial professionals that you're talking to determine who's going to be the best fit for you. Let's look at an advisor standards, a side-by-side comparison. So we're thinking about the role of a financial advisor versus an insurance agent / retirement specialist. And I'm saying that because these professionals have different credentials, different designations, different focuses. So let's think about what those are. So the role of a financial advisor is that they manage investments. And the role of an insurance agent or retirement specialist is that they build guaranteed income and protect your plan. A financial advisor is going to focus on market growth, whereas an insurance agent is going to focus on safe money, income, and legacy planning. A financial advisor is compensated, typically fee-based. This could be 1 to 2% AUM, assets under management, or a flat fee. An insurance agent's compensation is from the insurance companies. Now let's compare the fiduciary duty. A financial advisor is a fiduciary in investments, whereas an insurance agent is a fiduciary who acts with your best interest in mind. And what are the comparisons of the tools that they use? A financial advisor is going to use equities, mutual funds, ETFs, IRAs. This differs from an insurance agent or retirement specialist who is going to focus on annuities, whole life insurance, and long-term care coverage. So you can see the difference here. With a financial advisor, they're typically focused on growth and accumulation during that phase of your wealth building, versus an insurance agent or retirement specialist could be focusing on the accumulation phase. Perhaps they're setting you up when you're younger with protecting your assets, but there's always that protection factor for an insurance agent. It's obvious when you just think about insurance in general, you're insuring security. That's why we buy insurance. If you think about car insurance, homeowners insurance, life insurance, it's insurance. You're protecting yourself from risk. And so in this case, an insurance agent or retirement specialist is making sure that you're protected against longevity risk, so that your money lasts longer than you do, and that your assets are protected while you're alive, and that you can have that quality of life you want through insurance products. Let's dig a little bit deeper on how financial advisors get paid. Earlier, we talked about AUM fees. This is typically around 1% of your portfolio annually. So for example, a $500,000 account costs $5,000 per year to manage. Now, sometimes financial advisors have hourly or flat fees. So they might charge $200 to $500 per hour, or flat planning fees of $1,500 to $5,000. And then you want to consider the hidden costs for financial advisors. There can be fund expense ratios that go from 0.5 to 2%. There are wrap fees and transaction costs that add up silently. So make sure you're asking your financial advisor these questions, or the potential financial advisor that you might want to work with. Ask very specifically, what are your fees? And if you're already working with a financial advisor, I recommend that you ask them for a statement of their fees. This way, everything is transparent and you know exactly how much it's costing you to have your portfolio managed. How insurance agents get paid is quite different. Remember, I said that they get paid from the insurance company, so their commissions don't come out of your pocket. They get paid from the insurance company because that insurance agent is contracted with an insurance carrier, and they get paid from the insurance company to bring them the client. There's no separate bill or fee or statement, and products are sold as listed prices. Everything is contractual with an insurance agent. So you know upfront what the costs are, there's transparency, and you're protected because there are guarantees. Unlike with the assets under management, the portfolio that you brought to them has an advising fee, and whether they lose or gain, they're going to be making that fee based on the assets that you brought to them. And versus an insurance agent is getting paid upfront on the commission of bringing the policy to the company. And once you sign that contract for your policy, whether it's a whole life policy, an annuity, or a long-term care insurance policy, you know exactly up front what the fees are. You know exactly up front what your income is going to be, or what the terms of the contract are. There's no surprises at all. And again, that's why insurance agents are focused on protection. You have guarantees and it's contractual. And here, one place that you could be incurring a fee is in an annuity, where if you have that optional guaranteed lifetime income rider, there's going to be a fee for that, typically 0.95 to 1.2%. That's at the time of this recording in 2025. You will know that fee up front, and it's shown to you directly in the illustration and in the contract that you sign. So again, there are no surprises in the fees. I want to reiterate here the value of proper retirement planning. Gamma research conducted by Morningstar revealed that there can be a 20% loss of income with poor retirement decisions. And so you're looking at a 20% income reduction over the long term if you don't have proper planning. On the other side, there can be a 22 to 31% boost with proper planning. So if you want to increase your retirement income, you want to get help from financial experts. And last, with proper planning, there can be 7 to 12% tax savings. So if you're looking for tax savings and a retirement boost, it is important to talk to experts. This isn't to say that it's not important for you to educate yourself. Read everything you can. When I was on food stamps and I built my first business to 6 figures, I learned every single thing I could about wealth building. This is how I became an insurance agent, because the wealthy people that I was spending time with all had insurance policies, and they used the cash value to loan money to themselves themselves and become their own banks. And they taught me those strategies. And so I decided that it was important for me to get an insurance license because I wanted to bring that value to my clients who are entrepreneurs looking to build their wealth. That's not to say that you have to go get an insurance license. Come work with me. What's most important here is that you learn enough to not just hand over the controls to somebody without asking questions and knowing what's going on with your money. I really think this is one of the most important decisions that you're going to make because there's very little room for mistakes in retirement income. Small mistakes can lead to huge losses over the long term. You saw here that 20% of income loss can happen with improper planning. So just make sure that you're paying attention to what's going on. You're asking important questions. Have appointments with different advisors and agents. Find a good fit for you, someone who's going to hold your hand, explain to you what's going on, not have you feeling stupid for asking questions, and that they're willing to keep meeting with you until your questions are answered. One of my favorite things about being a financial educator and an insurance agent is that I never stop learning, and I'm very interested in making sure that you know what's going on. Part of that is because I like to know what's going on, and I always ask a lot of questions. Ever since I went from feeling very scarcity minded and scared to ask questions because I didn't want to look stupid, I decided, hey, I got to take my wealth building into my own hands and learn what I can. And now it's my quest to educate you and people who are interested in relaxing in their retirement by knowing that they're set for life. So now how are you going to choose the right fit? You want to think about, do they offer both growth and protection? Is that what you're looking for? Comprehensive planners should present balanced options, not just one approach. Are they focused on retirement income? So if you're looking to set yourself up for retirement income, your advisor should prioritize sustainable income, not just portfolio growth. Are they transparent about compensation? They should clearly explain how they're paid and any potential conflicts of interest. Now I want to give you 5 questions to ask before you hire a financial advisor or insurance agent. So get a pen, piece of paper, or notes on your phone and write down these questions so that you know what to ask when you sit down with a financial specialist or a retirement specialist. Are you a fiduciary? What that means is, are you acting in my best interest? Some of this is going to be by the credentials that they have, the designations that they have. Some of this is going to be in the way that they talk to you. And pay attention to how you feel when you're talking to a financial professional. Do they make you feel empowered? Do they make you feel stupid? Do they ask you a lot of questions? Do they want to build a relationship with you and get to know you? Or does it feel like they're just interested in getting your money? Pay attention to that. That's important because the way that they show up in that initial meeting is really critical to your long-term success and you feeling like you can ask questions. Remember, it's your money. So are they a fiduciary? Are they acting in your best interest? Number 2, ask them, how do you get paid? Is it fees? Is it commission? Is it both? How long do the fees last? Are they annual, quarterly, monthly, one-time fee? Ask these questions. Don't be afraid to ask. Number 3, what are you licensed to offer? Is the financial professional you're seeking licensed in investments, insurance, both, one or the other? Pay attention to that. This is going to vary based on your growth needs, your protection needs. So you want to ask those questions. Number 4, who do you typically work with? You can ask very specifically, do you specialize in retirement income? If you're looking for someone specifically for retirement, do they know about Social Security? Are they versed in insurance? Are they thinking about protection? Are they thinking about tax benefits and passing money on to your heirs tax-free? What's their focus? Do they specialize on accumulation or income, and which is important to you at the time that you're seeking them? And are they going to be a good long-term fit for you when you are ready to turn on retirement income? And number 5, what's your process for us working together? So you can ask, what can I expect from start to finish? What's your process? Now, since you're here with me right now, I wanted to answer these questions for you. These are my answers to the 5 questions. Number 1, yes, I'm a fiduciary who acts in your best interest. I focus on retirement income, not market-based growth. So I don't have an investment license. I would never say that I do. I can't give you investment advice. I am an insurance agent. I also have additional designations. I focus on strategies to become your own bank using whole life insurance. I am almost all the way through my RICP, which is Retirement Income Certified Professional. This is a designation by the American College, and it's a designation that is focused specifically on retirement income. I also have an RSSA, Registered Social Security Analyst certification, and I am an avid learner, so I will never stop learning. I'm sure I'll stack up the designations over my life course. I also have a PhD. It's not in the financial world, it is in sociology. My bachelor's is in psychology, and I specialized in human behavior. So I had a research position at the Institute of Behavioral Sciences, and the way that that's played out in money world is that, like I said, I went from food stamps to six figures in my business and then taught entrepreneurs how to build their wealth and focus on money mindset. So in that way, I helped people overcome their money blocks and learn how to make easier money by reducing the resistance to making money, because we all have wild money stories that taught us many challenging things about money. So in that money mindset mixed with very specific tools and strategies, I now help people build their wealth, pass it on intergenerationally in the most tax advantaged ways. And I just combine all my years of experience to win for you. I care so much about my clients. I love it when I get calls from my clients and they say, I feel so much more relaxed. Thank you for helping me feel at peace. And I get these calls a lot, and it feels so good deep in my soul. I care about you because I am a fiduciary who acts in your best interest. Number 2, I'm paid by the insurance companies. So there's no fees to work with me directly. The insurance companies pay me. Number 3, I'm licensed in Safe Money Solutions. So I offer annuities, life insurance, long-term care planning, strategies that are designed to protect what you've built. Number 4, I specialize in retirement income planning. I work with individuals and couples who are preparing for or are in retirement and are seeking safe wealth building, asset protection, and income generation. Now, I work with people of all different ages. I have clients in their 30s all the way through 80s. And the reason for this is because some people plan very early for retirement. So in your 30s, when you're thinking about becoming your own bank and using whole life insurance, really powerful to start young. When you're older, you might be using whole life insurance to pull on that cash value for retirement income. Annuities are going to help with guaranteed lifetime income. Long-term care is going to help you protect your assets so that you don't draw down your net worth through having to pay for long-term care expenses, which I've seen with so many people who come to me and say, you know, I have a family member who it's $15,000 a month and we're having to sell off their house and all of their assets to make sure that they can pay. So I'm really interested in that early growth. If you're 30s, 40s, 50s, we have different strategies for that. There's accumulation-based annuities. Then when you're moving into your 50s, 60s, 70s, we'll use insurance and annuities in a different way based on your age and your phase of planning. I love to think about this concept that I heard from Tom Hegna. He talks about the phases of retirement as your go-go, slow-go, and no-go years. Go-go is right when you're moving into retirement and you have a ton of energy, a ton of life, and every day is like a weekend. You want a lot of income in order to go play. And as you move through the phases, you slow down a little bit. You're not going out as much, you're not traveling as much. Potentially you still can, but you just don't do it as often. Then when you're in the no-go years, likely these are going to be your long-term care years when you're really staying home more and having those long-term care needs. So then there's even the pre-phase, right? He doesn't talk about this, but you're thinking about the pre-phase when you're building up the accumulation of assets. So for those 30 and 40-year-old clients that I have, they're thinking about how do I accumulate assets to then turn it into retirement income. So again, my specialization is focusing on how do we set you up, no matter what your age is, for retirement income that's guaranteed, contractual, reliable, dependable, there for you so that you can enjoy your retirement years. And number 5, my process when we work together is that you start with a retirement income Q&A call. This is where we talk on the phone and we get to know each other. I ask you a lot of questions. We see if it's a good fit for us to work together. I see if I have options for you. I might not have solutions for you, and if I don't, I'll refer you to someone who can help you. Ultimately, this call is to decide if we want to come up with a step-by-step plan, implement it, and then monitor it. I do 6-month reviews with all of my clients to make sure that you're on track in your plan and see if we need to add or remove anything. And that is how I work with you. So be sure to ask whoever you're talking to in terms of retirement income planning. Ask them these questions and take the time to really vet people to make sure that you're making a wise decision. And last, if you're ready to take the next step with me and chat about your retirement income plan, or if you want a second opinion on your current advisor's income plan, let's talk. I'm here for you. I think that you can tell if you've listened to or watched my lessons from the Retirement Income School, I care a lot about education and I am very much a relationship-based retirement income specialist. I care about you. I love chatting with people and seeing if we're a good fit to work together. And if we're not, that's okay. You really have nothing to lose by talking to me if you're thinking about seeking a retirement income specialist. So just schedule a retirement income Q&A call with me by going to retirementincome.school. You'll see a button right at the top of the page, and let's have a conversation. All right, that's a wrap on today's lesson. If you have not yet subscribed to the podcast or YouTube channel, be sure to do so. Turn on the notification bell so you never miss out, and continue to stick with me here at the Retirement Income School, where you'll learn to keep your money safe and make it last so you can enjoy retirement. This content is for educational purposes only and is not financial, legal, or tax advice. Always consult a qualified professional before making decisions about your retirement.